there and welcome back to Dukascopy TV. We're once again joined in our Geneva studio by technical analyst Bruno Hestier. Welcome, Bruno.
Good morning, Schneid.
So first things first, regarding the US market, how long are we staying in the range?
Well, we have been staying in the range already for 3 months, since about beginning of November, between 1980 and 2080 on the top side. And last 5 days, 6 days, we had a trial to break down, but it reversed immediately. It was a bear trap. And now we are closer to the top of the range.
So what could cause this rebound?
Well, we don't know if it's caused by or if it's just happening at the same time as there is a reversal in the long-term interest rates. These long-term rates, 10-year US yield, were moving down all the way to the level of 160 that we see in the first quarter of 2013. And again, there we have last week a very sharp reversal from 160 to 180, which is usually a sign that the downtrend is just exhausted and that prices are moving up. So now we are back almost at 2%.
And which sector is affected the most, do you think?
And of course, when interest rates are rising, the first sector which is affected is the most interest rate sensitive sector, namely the utility sector. We see on the top part of the charts the relative strength of the utility sector versus the S&P 500. It was moving up all of last year. It's now moving down. And we see also, of course, on the main part of the charts, a very sharp down break which broke a rising trend line. So that was a huge move on utilities.
Are there other defensive sectors also underperforming?
Of course, the two other sectors, which are healthcare and staples, are defensive and are also showing a slowdown in their relative strength outperformance. Namely, the healthcare, which was the best sector all of last year, is now topping and moving down. We see that on the top part, the orange line of the channel here. And we also see a distribution of the sector sideways. As well as on staples, the third sector is also has its relative strength. The dotted orange line is moving down slowly, and it's also the same distributive pattern as well.
Is the rise of the 10-year yield affecting other sectors?
On one hand, it's affecting utilities. On the other hand, it's also affecting banks, which are reflected in financials. Banks are doing, with rising rates, wider margins, and so doing more business. And we see that the banks, which relative strength was moving down during December and January, when interest rates were moving from 2.5 to 1.6%. During that decline, the relative strength declined, and now it made a bottom, and now it's moving up sharply. So it's one large offensive sector which is moving up.
Now, is this enough to have the whole market rise?
Well, we need, of course, the other sectors, other offensive sectors to move up. And already the discretionary sector was moving up already since mid-January. We see that on the orange line on the top part of the channels. And as well, the sector itself is making new high compared to the beginning of January. Also, we have the industrial sector, which is basically moving sideways. And a third sector which is not hindering the market anymore is the technology sector. There, the relative strength is a little bit lagging. That means the bottom was made 3 weeks ago, and now it's starting to break down, to break the downtrend line by moving up. And we'll see also it's on the nominal basis in the middle part of the chart. We see also that the downtrend is broken and momentum is gathering pace on the way up.
So, and the other two sectors underperforming, like energy and materials?
Well, these two sectors were really dragging the S&P down during this corrective phase, and there is a change there. Materials is totally breaking up. We see a very nice triangle, very sharp move up in the last 10 days, and also the relative strength on the dotted line, orange, is moving up. It's not anymore flat, it's moving up sharply. Energy, on the other hand, is still a little bit lagging. We see a very flat relative strength line, and we are still below the long-term downtrend lines. So all in all, basically, we do have the three defensive sectors, remember, utility, staples, and healthcare, which are underperforming. At the same time, we have financials, discretionary, and industrials, partly, which are moving up. So the offensive sector are moving up. It is a bullish configuration, so the S&P should move up in the coming weeks.
As always, thank you so much for your insight today, Bruno.
You're welcome.
That's all from Bruno and myself for now. Thank you for tuning in, and remember to keep clicking back to Dukascopy TV. Bye for now.